So with the life insurance, you know, when we set this up, how do we set this up to where we're using it and winning with it while we're living, right? And I want to actually give you guys an example of what this looks like, because it's something that when I first saw it, it was a complete unicorn. Right. I was like, there's no way this is real, because I was brought up that, you know, you never use whole life insurance. You know, you buy term insurance, you invest the difference with Wall Street, yada, yada, yada. Right. And so when I was told, hey, you can actually put a life insurance policy together where you can borrow against it and become your own bank, to me, that made no sense. I was like, there's no way this is a real thing. Okay. So I want to show you guys that it is indeed real. And I want to go over how it can be used. Right now, we're going to use some bigger numbers on this just to give you, just to give you kind of an exaggerated effect of what can happen. But you can do this with, you know, as little as $250 a month. But I'm going to show you guys what this looks like if somebody were to take the money that they were putting in their 401k, for example, and put that into the life insurance instead. Good. So I'm going to share my screen and just go over this with you guys really quickly. So this is a sample of a life insurance illustration. Okay. Now this is not an actual illustration. This is, if you're a client, this is not what yours is going to look like. This literally was, I think, something I put on my own illustration at age 28, just as an example of if I had a 401k and I used life insurance instead, what would I do? Right. So most people can put $19,500 a year. I believe that's still the current amount, into their 401k. Okay. Now, when they do this, they're locking the money up with Wall Street. They're not going to be able to use it till they're 60. Like, you can't use that money today. You have to wait till you're older. Okay. Now, here's the thing is this money, if I put this into a sacred account, first things first, that's going to buy me about $2.25 million in death benefit. Right. So you talk about securing the goal, like the end of the game is already going to be won. Whoever I dictate to be my beneficiary is going to get this. Now I'm going to dictate my trust as my beneficiary, right? So my trust is going to get it. And then from there, it's going to get distributed out, whether it's to kids, grandkids, businesses, charities, church, whatever it might be, right? Now, when I put this $19,500 in, I'm getting $2.25 million in death benefit, but I also from day one can borrow $15,723 out of my cash value. Right now, the 19.5 is still growing, right? But I want to show you guys, you know, 15,723 divided by 19,500. That's about 80% that I can borrow, almost 81%. So I put in $19,500. This $19,500 is going to keep growing, but while it continues to grow, I can borrow about 80% of it, and the 19.5 still grows. Right now, what does it grow at? It grows at a rate of about 3 to 5% per year. Right. So this money here is going to be earning about 3 to 5% per year, tax-free. Not only tax-free, but also guaranteed against loss, guaranteed to grow. Like I said, can't be taxed. I can grow the money in more than one location at the same time. I can be my own bank. It's protected from lawsuits. It's protected from creditors. It's a unilateral contract. It's got complete privacy between me and the insurance company. My loans don't get reported to the IRS. Like, there's a lot of benefit here. In my opinion, this is the safest place I can put money. Right? So I put in 19,500. I can borrow about 80% of that right off the bat. Let's say I had debt. I had $15,000 in credit card debt. I could borrow the $15,000, pay off my credit card. Now I don't owe the bank anymore. That money is like, there's no more interest accruing, none of that, right? The money that I used to pay to the credit card, I now take that and I pay myself back. Meanwhile, my 19.5 is still growing like it never left. And my savings rate went up. I just did this with someone this week. We paid off some of their debt, and I was like, okay, the coolest thing here that's so easy to miss your old debt payment that you used to have on that credit card just became your savings rate. Like that's increasing your personal, percentage of income being saved. If you used to pay $200 a month on that debt, the debt's gone. That $200 a month is now freed up. You're paying back your policy loan. That's your bank. That's saving, because the $200, once it pays the loan back, is yours. You can use it again, just like a savings account. You can pull it right back out tomorrow. You instantly increase your savings rate by $200 a month in that example, right? So that's one example of using life insurance while I'm still living, is I can borrow against it and I can pay off debt. If you're wondering, what does Wealth Dynamics do? How can we actually help you? Number one, if you haven't gotten a copy of my book, Blueprint to Financial Freedom, grab one now. You can get that down in the comments in the video. You can get the link for that. And finally, if you have a desire to start getting help walking through these different phases toward financial freedom, book a call with my team. Go to our website, set up a call, and we're able to help out and answer questions. That's how we can help you. Thank you for watching. Like, share, subscribe. Make sure you turn notifications on, and I will talk to you guys on the next video.